Hi, this is Jeff with Union Home Mortgage, and just wanted to share some numbers with you to give you something to think about as you make decisions whether to buy right now. We'll hear in a second. If you want to double check the numbers on the rates that I'm about to give you and the parameters that were used, go to the Fed Reserve Bank of St. Louis and look up the mortgage rates, and they have the daily averages for every loan product. Those are reported the next day, and they don't include points, fees, they're not APRs. But this lady comes in, great lady, great family, brought a friend. She wanted to buy a home, and we went over rates, everything. She's really happy. Went home last night. Her husband said, "Hey, I don't want to finance right now. I don't want to buy right now because rates are high unless you come down." Well, if you look going back in the trends before 2006, 6 to 7 to 8% wasn't really unusual in the industry. These have kind of returned to normal. But for her example, was that if she financed $200,000 today at 7%, her principal and interest payment over 30 years on a fixed loan, conventional, would be 1330. If they wait 6 months or so, and by some miracle, rates came down a 0.5% to 6.5, but the amount she needed to finance went up 10 grand. That's just 5% to 210 on those same parameters. Her credit stayed the same and all that. The principal and interest payment would be 1327. That's $3 difference, and she would have lost 10 grand in equity. So as you think about waiting or going ahead and pulling the trigger, consider the idea of buying now and refinancing if the rates come down and become favorable for you. Assuming houses continue to appreciate, which right now economically there's in in other ways I could show you in another video, there's no reason why houses should depreciate in the foreseeable future. Anyway, think about that. If you have any questions, concerns, you want to look into doing some financing on mortgages, please give me a call or reach out to me via my Facebook.